the next hour, we'll dive deep into practical strategies you can use immediately on how to use Bitcoin transactions and actually how do they work in real estate. Also, we're going to learn a lot about smart tax strategies, risk management, and lending opportunities. So let's jump right there. The first question, what's the actual process when a client wants to buy a 500K property with Bitcoin?
This is a very important topic if you're in the real estate market. I think I'm a little biased, but I think one of the hottest topics right now is cryptocurrency and how to execute real estate transactions. So I'll break it down for everyone pretty quickly for those that are realtors in the room and for those that are watching at home, potentially any investors, new buyers that want to invest in the project, how they could execute crypto-related transactions as it relates to any project, but specific to this project. There's really 6 ways that my clients most of them are crypto-rich, cash poor. They don't have very much money at the banks. They probably haven't had a job in many years because they haven't needed to have a job. But there are some clients that are not necessarily crypto, which have a decent amount of crypto. So there's really 6 ways that I execute these transactions, and I'm going to give the sauce and the secret right now. The first is they sell their crypto, which outright, which I'm sure that will say probably not the greatest idea and the worst for tax implications. The second is that there are crypto lending platforms that are outside of the FDIC banking system, where borrowers can borrow against their crypto holdings, anywhere from 30 to 50 to 70% loan to value, and they can get a loan against their crypto holdings, which basically they would essentially avoid their capital gains tax, that no tax liability when they borrow against their holdings, and they can borrow whatever they want to buy the property. So that's the second way, and I'm sure they'll speak about that as well. The third way is a hybrid approach, which is typically the approach that my clients use. Well, they'll maybe get the down payment. They'll do a crypto loan for the down payment, and the remaining, let's say 80% of the funding, they'll do a non-QM loan. And there's only one, let me backtrack. I'm a licensed real estate agent, and I'm also a duly licensed mortgage loan originator. I'm the head of the crypto division for Avanti Way Realty, and I'm a mortgage loan officer for Nexa Mortgage, which is the largest mortgage broker in the country. So I digress. They'll get a non-QM loan, and there's only one bank that I found in America that will actually do a non-QM loan, where if the borrower has enough crypto to actually buy the property outright, that I found the bank that will actually lend an 80%, will cover about 80% of their loan for the property. So it's a hybrid approach of a crypto loan and then a non-QM loan, which is where most of my clients fall. The fourth way is an actual crypto-backed mortgage. So there's one company, for all of my love, based in Miami, fortunately in Wynwood, where they'll actually do a 30-year crypto-backed mortgage at a 1-to-1 ratio. So if you want to buy the $500,000 property here at Almeria, you can give them $500,000 of Bitcoin. They will give you a $500,000 loan fairly quickly, and they'll take it's a 30-year loan product, and they'll take a lead position on your property. I want to digress and say that the crypto loans that my clients take are 1-year loans versus BILO, which is a 30-year loan. But the crypto-backed loans, they don't go on your credit score. No one really even knows taking out a loan, and they're not taking the lead position on your property, which is why you could do the non-QM product. Crypto loan doesn't show up on your credit report. Non-QM loan, obviously this 30-year loan, will show up on your credit report. So those are the 4 ways. The fifth way, which they discontinued this product offering, but I think that's going to come back, and I think that with the new administration, we'll see it come probably this year, if not next year, is an asset-backed loan. Where if your clients have, let's say, $1 million of crypto but have no job, they will take that $1 million of crypto, they will divide that by 84, which is around $10,800, 84 months, and they'll say, okay, your client makes $10,800 a month, and they'll give a loan based on that monthly salary, which is probably a $3,000 mortgage. And they can also stack income. So let's just say you have a client who has $1 million of crypto or $500,000 of crypto, whatever it is, and they do Uber on the side. They don't make enough to qualify for a traditional mortgage to buy this property, but when you stack that income with their Bitcoin holdings, there are lenders out there, or previously there are lenders out there that would lend against that or give you a loan for that. They're not around now, but I think that we're actually see a lot for now. That's a product that's needed. And the sixth way is DeFi. So decentralized DeFi is abbreviated for decentralized finance. None of my clients have done decentralized finance strategies where with crypto-backed loans, you're dealing with a company, you're dealing with a centralized entity where you can actually call a hotline or email someone and someone will respond via customer service. With DeFi, there is no customer service, there is no middleman. You're literally dealing with another person who's willing to lend you at usually a way cheaper rate than the crypto lending platforms are. And what's governing the loan is computer code. So it's computer code is governing the loan between two parties where I will lend you XYZ in Bitcoin for 4%, and you'll pay me back during these terms. And that contract, you may each and over the other person is done through a smart contract, which is essentially computer code. None of my clients have gone that route. That is the most cost-effective route to borrow money. But my clients typically like having, everyone wants to be decentralized and not deal with things and not deal with people. But 99% of the public is not capable of not having like a middleman, and they feel more comfortable with having someone that they actually call if something goes wrong or to help administer their loan. So those are the 6 strategies that I use to execute crypto real estate transactions.
Okay, super. Thank you, Eric. What are the 2 main approaches? Direct Bitcoin transactions versus conversion. And when would you recommend each?
Either is taxable. So if the developer is accepting Bitcoin, there's a misconception that I helped alleviate in the South Florida market where there are some developers that were about to start promoting these type of transactions because they thought that if the purchaser, wherever they were in the world, was sending them Bitcoin, that it was not a taxable event. I'll let this gentleman talk. He's way more educated than me and is actually licensed. But the second the cryptocurrency leaves your wallet, it goes to anyone else's wallet other than your own. If it's gone up in value, it's a capital gain event. If it's gone down in value, it's a capital loss. Correct? I should put my accounting. But right. But so either way, whether it's being sent to exchange or like Blockbills is exchanging it for dollars, it's a taxable event, or whether the developer is accepting it in their developer wallet, it's a taxable event. So there's actually really no difference between converting Bitcoin or sending Bitcoin from a tax perspective and sending Bitcoin to the developer. However, there are individuals that are located outside of America where they don't trust their governments and they don't trust their banking systems, and maybe it's difficult for them to find a conversion partner to convert it into dollars which the developer is going to accept. So that needs a company like Blockbills to send their crypto to, who can then convert it into dollars to develop accept dollars. But I'm sure we'll touch on that.
Okay, excellent. Now, can you walk us through a real case study where Bitcoin was used successfully in a real estate transaction?
Sure. I'd executed over $20 million of crypto-related transactions. My previous client, it was a $780,000 condo in Edgewater. He didn't want to. It was $780,000. I'm not going to say how much he's worth, but he's worth significantly more than that. He didn't want to spend his Bitcoin to buy the property because he get the capital gains tax, 50% long-term capital gains tax. So basically, let's just say it's $800,000. If he spent Bitcoin on that property, he would be paying 15% more than the purchase price because Uncle Sam he got Bitcoin when it was less than $1,000. Bitcoin's now $112,000 the use count. So he would be paying that basically that 15% capital gain on that. So what he did was he did a crypto. What did he get? He actually sold 30% of his holdings because he didn't mind paying the capital gain. He sold 30% of his holdings to pay for the down payment on the property. He sent the down payment into his bank account. He used a crypto exchange in America to do the conversion. It sat his money for 60 days. You have to season it. 60 days is what the underwriters like to see at the non-fluent lenders, but 30 days you can get away with it. He used me as a real estate agent without connections. But so he had the 30% seasoned for 60 days. It was like $270,000. And the remaining $560,000 or $580,000, he went to me and I helped get him a loan through that non-fluent bank in America that gave him a loan because they saw that he didn't just have like a few $100,000 in Bitcoin. He had multiples amount more than the purchase price of the property, and they knew that if Bitcoin dropped like 80%, that he would still pay his mortgage. So they gave him a loan. Now, you're all going to be shocked. Your draw's going to hit the floor what his grade was, and he didn't mind it. His rate for this non-fluent lender was 10.4%. which is crazy. And you may say, well, why the hell is he going to pay 10.4%? That's ridiculous for two reasons. Number one, he doesn't have to pay that 50% capital gains tax. So he's saving, let's say, 4% or 4.5% of capital gains tax. But the main reason is all of my customers who are Bitcoin OGs believe that their most valuable asset is actually not physical property, it's digital property, it's Bitcoin. And Bitcoin has historically appreciated at 60% a year. Property has not historically appreciated at 60% a year. So why would they ever give up that asset to buy another asset, which also appreciates in value and is great for creating generational wealth, but not at the rate that Bitcoin has proven it's generated over the last 50 years. In other words, my clients don't want to get rid of that asset. Or if they can leverage it and borrow against it to buy physical property, they can't live in their mom's basement their whole lives. That's the strategy they tend to go.
What's the biggest misconception brokers have about crypto transactions that we need to clear out?
Well, I think that they think that it's a shady industry and that's nefarious and there's criminal activities that go around behind it, and that's very complicated. The title agents that I use, and we have folio title here, the title agents that I use, although I have a relationship with them, it settles in dollars. My transactions, I want to be clear, all of my transactions settle in dollars. So there's no complication to the contract at all, to the way it settles. My contracts are written in dollars and not priced or written in Bitcoin, although I could do that if I had to. It's a traditional transaction. There's really no difference. With what's going on with the U.S. government, where they're accepting Bitcoin as a reserve asset, the way they have gold as a reserve asset, as you see other countries are following U.S. policy, as publicly traded companies start to hold Bitcoin as a reserve asset and a hedge against inflation. It's only a matter of time before we see developers, like great developers here, that are accepting Bitcoin for the transactions. It's only a matter of time before associations start collecting maybe a portion of their fees in Bitcoin to cover some of their maintenance cost. So any broker that's or developer that's not willing to accept cryptocurrency or doesn't understand how to execute cryptocurrency transactions are going to be left in 2025.
Eric, thank you very much. And now we're gonna go with the this is the question every broker with crypto clients asks. How can someone use their Bitcoin gains to buy real estate without triggering massive capital gain taxes?
Good question. But as Eric said, the best way to do that is to borrow against your crypto, right? Borrowing against your cryptocurrency does not trigger capital gains, right? If you were to buy directly or you were to convert it to fiat and then you were to buy your real estate with that, it would trigger capital gains tax. So the best way to do it would be able to get a mortgage backed by crypto, getting an asset that's an asset-backed loan that we those are primarily to use, or even a bridge loan, right? There's a lot of people there are a lot of companies that do that thing. Demify, there's a bunch of companies against which you that will allow you to borrow against the asset that you have on your own personal balance. You can be your own treasurer. It's one of the beautiful things about Bitcoin or cryptocurrency in general. It allows you to leverage the fact that Bitcoin is truly digital gold. That really is what Bitcoin is. The same way in which the U.S. has gold as a reserve against its own fiat currency, you can hold Bitcoin and be your own bank. So the best way in which I would recommend it, if you don't want to trigger capital gains tax, borrow against your own assets, purchase real property from there.
Can you explain the 1031 exchange strategy with cryptocurrency? Is this actually legal and how does it work?
That's a good question. Okay, so I'm going to take a step back and just define the terminology, if I may. For those of you who don't know, what a 1031 exchange is, you are allowed to invest in a commercial property and you are allowed to sell that property and reinvest in another commercial property and defer the gains. Okay, that's what a 1031 exchange is. Prior to 2017, the first Trump presidency, there was a large debate about how cryptocurrency is really classified. And in 2017, the administration passed the Tax Cuts and Jobs Act, TCJA. That comprehensive tax reform clearly defined 1031 exchanges to be exclusively for real property. Okay? So, 1031 exchanges are legal. They're legal, they're completely legal. Okay? However, they are not able to be used for cryptocurrency. 1031 exchanges are exclusively for like-kind properties in the commercial real estate market. So, I believe your question was how can we leverage the code section in order to be able to purchase real estate? Okay. So what I would do is I would ask myself, if you want to be able to leverage this code setting, what is it that you are looking to do? Are you looking to just buy a commercial property and be in the profit, like be in the lending business, be in the commercial property business? Or do you want to buy it on your own and then potentially at some point you're like, oh, you know what? This is a nice asset. I have a family now. I'd like to rent this out to somebody. In which case, it's a property that goes from personal use to going into commercial use. So there's many different ways to get into legislative. But you borrow against your big bond. It does not trigger a taxable event. Essentially, you purchase a commercial real property, and then after a certain holding period, you then transfer it again. You then purchase the new property and you restart the cycle all over again. Right. So that's fine. So the way that this works is that after you have gone and sold the property, you have 45 days within which to identify the next property that you want to purchase. Okay.
So it's after you sold the first.
After you sold property.
5 days.
Yep. After you sold the first property, you have 45 days within which you have to identify the next property. So when I was working in real estate, what we did was we had a research period before we sold. And we would essentially do our due diligence beforehand. We would identify the property. Then we would trigger the transaction. Okay? After that, you have 180 days to close on that property. Remember one thing though, that money you cannot touch. The sales proceeds from the first property, you cannot touch. It has to be held in escrow. If you touch it, it triggers a taxable event. So what happens is you have an intermediary who then who takes the money from you and then sends it to the next person. That's the way that a 1031 transaction works. The only question is, how long is the loan that you had on your crypto for, right? You have loans that can be, if traditional, correct me if I'm wrong, but you can have 30-year loans against your crypto if they're crypto-backed mortgages.
So the crypto loans are the crypto loans are 1 year, 1 to 2 years. They don't typically go beyond 2 years, although I think he may offer broader than us. The crypto mortgage, which again, there's only one company that does it, buy low, is a 30-year pilot there. So,
Thank that. So essentially, depending on how long you have the outstanding loan for, you can do the 1031 exchange indefinitely until you decide, hey, I just want to repay my loan, or it's time for me to repay my loan. At that particular point, you repay it, or if you want to sell the asset, you can do that and then repay it. And there's different ways to be able to do that, but I think that's outside of the scope of your question.
I actually have a question because I love getting free accounting advice. So I actually have two. This is a two-part question. I'll ask them quickly. If a Colombian or an Argentinian wants to use their crypto to buy property in America, and they actually use the crypto to buy property here at Almeria, is there a capital gains event? Are they taxed in their country and not in America? That's my first question. And the second question, I believe that prior to 2018, that people could 1031 their crypto gains. So I bought Bitcoin and I had $10 million gain in crypto, but I could take that $10 million of crypto and buy physical property with it and defer my capital gains event. And then I think between the transition of the Biden and Trump administration, somehow that crypto actually got on the national radar and started getting heavy media coverage on Fox, CNBC, CNN, wherever. In 2017, 2018, all the politicians saw this, didn't understand this, and we got to get rid of that loophole, the 1031 loophole. So my question to you is, do you think, let me digress, I was at the Florida Realtors Conference in Orlando, and I asked all the 1031 companies there if this was being discussed, if they were going to bring this back. They all said it's not even a topic of discussion. I think they're hiding something. I think it is going to come back. Do you think it's going to come back? Do you think that either this year or next year, the Trump administration will allow those crypto gains to be rolled over, digital property gains to be rolled over to physical property gains? Loaded question.
Good question.
Very, very good questions, especially in the market we're in. right now, a lot of foreign investors. So to address the first one with I hope it's not a non-answer, but
Don't give out legal and then okay, then
it depends. No. It's not. It depends. The non-answer essentially is, I believe that you asked, does it trigger a taxable event in the country in which they are sourcing their loan from? That is unfortunate.
if there is no capital, I don't know what the Colombian tax law is or Argentina or anywhere. If there's no capital gains in that country, then it doesn't trigger a capital gain if they used it.
So it depends on the laws of the country. Unfortunately, I'm not an international tax lawyer with regards to this, but it's a jurisdiction by jurisdiction basis, right? So I can't answer the first
Well,
one.
it's not an American tax thing.
If you have the funds and if you have the fiat in USC, you're not going to have a problem. The only thing that you may have is if you decide to convert, let's say you are in Chile and you are doing a loan in Chilean pesos, and you then decide to purchase a USD, then that may trigger a tax conversion on which case you may or may not have to pay, the tax on foreign currency translation. That's question number one. I hope that answers it. Question number two is a bit more not tricky, but I'm going to give a bit of a pushback on this. So the reason why that I don't believe that is going to happen is because 1031 is specifically for what's known as like-kind exchanges. Okay, so doing a conversion from crypto and putting it into a real estate asset would have automatically been deemed as a sale and a purchase, even prior to 2017. What was tricky was for example, if anyone remembers the NFT boom that happened back in 2017, 2018, if you sold an NFT and repurchased an NFT, right, prior to the Tax Master Jobs Act, that would have been considered like-kind exchange. It would have been a little bit more, it would have been challenged a lot if you decided to take that position on a tax return. Does that answer your question?
It does. Yeah, it does. So you don't think that the government's going to change that 1031 because the government doesn't look at cryptocurrency as currency right now. They look at it as a commodity, as property, But it's property for property. But they're like, oh, digital property, it's physical. But to me, it's property.
So that's why they say the like-kind exchange, right? That the terminology is strictly defined in Section 1031. If you take a little bit of verbiage, it says like-kind exchange or something. And now it's strictly enforced on real property.
Thanks for the free advice. You are. That'll be fine with the constantary.
Okay, the next question is regarding of client protection. What legal structures should brokers recommend to high net worth crypto funds for maximum tax protection?
The strategies that would be used specifically within the scope of your question would be a little bit difficult for real estate. Okay, the reason being is because the only ways in which I can really see, as per my research, the ways in which you can leverage an entity in order to be able to purchase real estate. In order to be able to kind of like get the capital gains deferral, would be using either charitable remainder trusts, would be using, I believe they're called Delaware structured trusts, if I'm not mistaken, or some form of an entity where the ownership is not on you. Generally, those are trusts, right? But there's specific types, right? So generally, if you're going to be you can do the thing where you are purchasing your home through the trust and you can make the contribution into a trust. Or you can do you would do capital gain deferral or capital gain and so the avoidance, but let's call it avoidance, right? If you want to be able to get the best of both worlds, borrow against your Bitcoin under your own name, okay? There are a lot better ways in order to be able to invest in real estate and in order to be able to buy a home under your own name, which would allow you those tax benefits. I'll give a free one here, okay? 500 for all of you, all right? So, one of my favorite ways to do it is called a 121-1031 combination. Does anybody know what Section 121 is?
No.
No, okay, all right. Section 121, the IRS code, says that if you are having a primary residence and you live in that primary residence for 2 years out of 5 years and you sell that home, if you're a single person, you are allowed to exclude $250,000 of gain from your home, from the transaction. Married filing jointly, $500,000. Okay? So, ultimately, the way in which you would do it, use a company like Phila, borrow against your Bitcoin, okay? Don't trigger a taxable event. Then live in a home. You decide, okay, I want to be able to move. I want to do, I want to do something else. I want to live in a different place. Cool. So ultimately what you do is instead of selling your home, you decide, okay, I'm going to go rent for 3 years. Why? Because you want to take your home and then you want to convert that into a commercial property. You're renting it to somebody else. Okay? So now you've gone from making it into a into a personal property, into a commercial property. So now you've satisfied section 121, which has, you've lived in that home for 2 years. Okay? And then you just have to hold it for 5 more years before you're allowed to claim that exclusion. Okay? So now you use the property as a commercial property. You are, depreciating it. You have renters. You have people that are, let's say, there's a young couple in there, whatever. And then at some point after 5 years, like, okay, I want to sell the home. Cool. What you're allowed to do is you're allowed to exclude, let's say you're a married couple. You're allowed to exclude $500,000 from the sales price. And then the remainder of the amount you're allowed to defer. So you've not triggered tax capital gains on your crypto. You've excluded $500,000 from your taxable income, and you've deferred all that gain for the new property that you decided to purchase. The only caveat is 2 things. 1, you have to purchase a commercial property. Okay, that's the section 1030 on the use. All right, the next property that you purchase has to be a commercial property, not your personal property. Okay. That being said, you could technically structure it where you decide, I had an apartment building and I'm using a commercial property. I'll be buying this as a commercial property, and you want to be able to live in it, right? There's ways in which you can structure it where you can live in that property. You just define it as commercial property. The second thing is because you've depreciated it to a certain bit, you have to do what's known as depreciation recapture. Okay? You have to pay the tax on the depreciation when you've triggered 1031, when you've done the sale, and you have to pay, I believe the cap is 25% on the depreciated amount. Okay? So it's not like you're going to pay 0 tax. You will pay some. But essentially, you're deferring a good amount of the gain, and you're excluding a good amount of the gains.
What's the biggest tax mistake you see people making?
Not reporting your crypto. That is a huge mistake. Do not do that. Okay? I was speaking to someone earlier, and they mentioned something which I would like to be able to reiterate. Thank you. Just like your EIN is, everything is, if you have an EIN or you have an entity that's able to be found publicly, your wallet is public knowledge. We have KYC rules of the U.S., and there are people that the IRS will go after you. They just had a massive capital ingestion last year. So for everything, your wallet is public, and you have to report that. Right? They will be able to find out who it's from. They will audit you. They will use the full power of the federal government, and they will come after you. So just don't do it. Don't do it. That's my only report your crypto.
That's what the biggest mistake you see people.
Not reporting their crypto. I've seen people with
But how much you have to report when you start?
report everything.
Where?
You have-
$100?
Ev-
$100?
So the thing with that is you have a de minimis amount. Okay? So this is... I'm sorry, just out of a show of hands, how many of you are very familiar with the cryptocurrency space? Just by a show of hands. Say about 20%. How many of you are moderately familiar with it? Moderately? Okay, another 20%. You can buy crypto one of 2 ways. You can buy it on an exchange, or you can buy it direct, right? If you buy it direct, you're buying it from a wallet to a wallet. It's very similar as if I take out, $5 from my wallet and I give it to you, and you take $5 and you put it in your wallet. Same stuff, okay? Buying it on an exchange is very similar in mechanism to buying stocks on E-Trade or something like that. Okay? If you buy it on an exchange, the company that you buy it from, and you hold, but even if you don't hold it on an exchange, if you had a transaction on the exchange, let's say Coinbase or Cash App or something like that, they will send you a 1099 form. That 1099 form will have interest. It'll report the interest. It'll report the dividends. It'll report how much you sold. All that, not if you pull. Okay? In that case, that automatically gets sent to the IRS by the exchange. Or you buy or sell. When you sell. Okay? However, if you have a wallet, if you've done a wallet-to-wallet transaction, or, like you said, if you've only bought, use company. I'm not affiliated, I promise. But use companies like CoinTracker, CoinMe, all these different kinds of things. All you'd have to do is copy your public key, paste it into there, and then it will generate a report for you. I think they're going to charge you $8 or something higher. But they will essentially just do your entire reporting for you. Instead of Ledger, at the end of the day, all you're doing is using the Ledger technology to be able to fill in. That's what these companies do. Make sure that you complete those forms. Report the wallets, everything in your wallet, and make sure that you report that to the IRS. You're going to get hit with huge penalties if you don't. Sorry, I don't mean to be a Debbie Downer, and I know a lot of people here don't want to hear that.
I use the platform that he uses. It cost me $100. It $100. I create that my report. I get my report to my account.
What about self-custody?
Self-custody would be wallet to wallet.
Right, so you have to record that.
Yes. So essentially, let's say, for example, you have a BitKey or you have a Ledger or a Nano, right? That comes with public address. Copy that in, post it in there, and it doesn't make a difference if you have it in there or not. You should report it. You should report it. Like if you have not recorded it for KYC, all those other kinds of things, the penalties that the fund have to use is heavy. I don't even want to tell you. I have a client. I don't even want to tell you how much they got charged penalty for. It was an egregious amount. It was a down payment fund in the market. Like, it was insane. So
It doesn't mean that you have a taxable event.
right, that's the other thing.
They just want to know how much you're holding.
Yes, that is the thing. This is a fit sample, financial crime school. You just have to make sure that you're reporting all of these.
Thank you very much. Yes, definitely on the call you have given us this aid to save a lot of money to a lot of people. So thank you.
Thank you.
And we're going to talk with Giancarlo Verde. That's how I'm pronounce your last name?
Yeah, that's fair.
Verde. Okay. He's going to talk about risk management and yield opportunities. The first question: what is block deals and how do you serve high net worth investors and the institutional crypto market?
I first want to say thank you to Eric and Muick. I think it's great work you guys are doing here in the industry. And I want to say thank you again to all the crypto heads. And thank you to Almeria for having me. So block flows. We do a wide array of services. We have men purchases as well. But to keep it short and sweet, Block is an institutional market maker, liquidity provider, serving hedge funds, high net worth individuals, treasury management companies, whales, and really anyone who's looking to do anything with their coin. And we service them by providing access to Barcode spot markets, options markets, structured product markets, and lend and loan services.
Thank you. Now we're going to talk about yield generation. The question: how do people use option markets to generate yield?
All right, yeah, let's tackle that. So a blog post noticed that many people in treasury management companies, whales, just hold their Bitcoin, appreciates, it's volatile, and moves. So it'll continue to do that if you hold it, and if you follow our yield generating strategies, it'll still continue to do that, but you'll be able to generate some money on the side, either in cash or in Bitcoin. So I think the best way to tackle this question is going by an example. So we use something called selling covered calls, which is essentially an options contract. So the example I want to propose is, let's take September 26 as your expiry date and your strike price 130,000. So if by September 26 you think Bitcoin is not going to be worth 130 grand or more, then the market is willing to pay you $500 per coin to assume this risk. So let's take, for example, you're away and you're a treasury company, you hold 500 Bitcoin, and the market is paying $500 per Bitcoin, and just to assume this risk that Bitcoin will not surpass 130 by end of the month in September. So let's say Bitcoin at the end of the month is at 125 grand. You will essentially get paid by the market $250,000 just for taking on this position. And let's backdate it a little bit. Well, not backdate, forward it a little bit. Let's take December 26th. If you don't think Bitcoin is going to be at 140 grand by let's say December 26th, then the market is willing to pay you 3,500 per coin just to assume this position. So if you have, let's say, well, yeah, let's just keep this example at one coin. That is 40% APY on your investments. And bought this is the name of many treasury companies, whales, and people just increase their holdings by taking on these positions. And there are also the risks, yes, but we help our clients tackle them by your decisions.
How do you take risk management when dealing with Bitcoin investors?
All right, so more than anything, we buy puts. We buy puts, and this means that we enter a position in the market via options contracts that if Bitcoin were to appreciate, we would consider an insurance. We would go into a position that gives you the right but not the obligation to sell your Bitcoin at a predetermined price at a certain date. So let's take, for example, Bitcoin is at 110, and you wouldn't want it to go to 90. We would think it's going to 90K. So you buy an options contract that gives you the right but not the obligation to sell your Bitcoin at, say, 105 grand. And let's say Bitcoin did go to 9 grand, you would be able to sell it at 105. So you're mitigating your risk.
Now, what's the returns on those profits?
So
Did it just time?
So yeah, at least up a lot of those we could do on daily, weekly, monthly, year, whatever you were looking for. We, like I said, we offer deep liquidity, tight spreads, so we could serve really any expired date.
It's a bit about
All right, so if you are from the United States, you gotta be an ECP. That means you gotta be worth 10 million or more in assets, not including your personal home. But if you're from Colombia or you're from Russia or you're from anywhere else in the world, not being in the United States, then you could be worth $1 and all the last contract.
It's just fascinating. I have another question. Why would someone want to borrow dollars against their Bitcoin rather than just selling it? This is regarding the other analysis you provide, which is lending.
Well, tax purposes, which we already went over. But really, you want to borrow dollars against your Bitcoin because you think Bitcoin is going to go somewhere. You want to hold your coin. You want to keep it with you. You're a believer of this mass financial adoption we're seeing. As people who want to hold your coin, who want to keep it, so you'll come to a company such as Rockfills or Bio, and you'll post your Bitcoin as collateral and receive USD for.
Yeah, I think that there's something very important. It's the valuation of the US dollar or the Bitcoin, I guess, the US dollar in a 1-year term, which I just noticed that was like 70%, year to date, which is an amazing appreciation of the Bitcoin.
Yeah, I was actually just about to touch on that, and I'm going to get really nerdy at everyone. In 1973, Richard Nixon took the U.S. government off of the gold standard. The dollar was no longer pegged to the amount of gold that we had. The reason that Richard Nixon did that is because he wanted to fund the Vietnam War. We didn't have enough we didn't have enough gold to fund the Vietnam War, so Richard Nixon came up with this brilliant idea to say, let's just print more money to fund wars, and we came up with the gold standard. Since Richard Nixon made that amazing decision to do that, the US dollar has lost 92% of its purchasing power. During COVID, US government printed 1/3 of the U.S. printed dollars that are in circulation during COVID. You printed money out of thin air. And everyone's wondering why your basket of eggs is $16 and your Shake Shack burger is $25. So the U.S. government keeps printing money. We print it during turns of war. We print it when there's issues with the economy. We keep printing dollars. Why does anyone want to hold dollars when we lost 92% of its purchasing power since 1973? And the government just decides to turn on its money printer whenever there's a war going on or when COVID happens. It's taking the government, the American government, other governments, I think Venezuela, Cyprus, they'll actually take money out of your bank account. I have a friend in Cyprus, which is a little island. He woke up one day, 50% of his money was removed from his bank account. It was 50% poorer the following day because the government wanted to pay off its national debt to England. Now the country has no national debt, and my friend can no longer afford his Ferrari. That sucks. So, in America, we don't do that. We don't actually take the money out of the bank. What we do is called confiscation through inflation. We just keep raising taxes, printing money, and we're inflating, which is essentially stealing your money out of your bank account. Your purchasing power is being devalued. So if you can borrow against Bitcoin, which is appreciated in value 60% a year, versus going against the dollar, which is inflating at, let's say, 7% a year now, but against since 1973, it's gone down 90%. It's probably one of the best, another financial advisor, probably one of the better financial decisions you can ever make in your life. When we look at what's going on in Israel, when we look at what's going on between Russia and Ukraine, all these wars that are going on, it's only a matter of time before we turn on the American US dollar printing press again, which is going to continue to reduce your purchasing power. So buy Bitcoin.
What's the collateralization method for the derivatives or mortgages? I mean, it's not UCCs. I mean, what are you doing with, how do I collateralize my?
Yeah, I'm happy to go over it. And so let's take a 50% LTV. Let's take a 50 LTV. So you'll come to a company such as Blockfuls, and you'll deposit, for math purposes, let's say $1 million, like 1 million in Bitcoin. You deposit 1 million in Bitcoin, and at least Blockfuls goes up to 65 LTV. So if you deposit 1 million Bitcoin, we could give you up to
About transfer fee?
yeah, we'll give you $650,000 in USD.
But I'm transferring the asset as custodian.
You're transferring the asset to us, and who knows, if your asset keeps appreciating, that we all think it's gonna keep appreciating, then your loan might pay back itself.
The other levy touch on that's very important. Other levy companies, the four companies that I didn't mention, but they're out there in existence in America. They offer 30% LTV, 50% LTV, and 70% LTV. Typically, the 30% LTV start at the 8 to 9%, and then they go up to like 10 to 12% when you're at 50%, and then when you're higher than 50%, which is 70%, you're at a 14 to 16% loan-to-value ratio. You have to give up your crypto to them, and they custody it. Typically, they're custodying it, and this is a very important question to ask with any company that you do a crypto loan with. Who's your custodian? Because you don't want that company to have the liability to hold it. They're a startup company. All these companies, data Blockfuls, and all of them are startup companies, right? And there's a very high failure rate to any startup company, but the companies that are out there have shown that they've been around for a while and they're trustworthy. They typically custody your crypto with Coinbase or Anchorage or any of the credible custodial agents out there. So if that company happens to go bankrupt, there's a third-party company that's still holding your collateral. These are one-year loans, the ones that I'm talking about, and they do margin call. So that's why I wouldn't recommend going above a fit. I don't tell my client, I don't really give them financial advice, but I say I wouldn't recommend you go up over 50% loan to value, because if I'm buying a property, Almeria, and I'm giving $1 million of crypto to XYZ company, and I'm getting a $500,000 loan. By the way, instantly, like within 6 hours, I can get a loan in 5 minutes. But most people, you have to do KYC, AML, will get a loan in 6 hours, or maybe the next day. Within 24 hours, you get a loan, or you get the money in your bank, get $500,000 in your bank, which you get a wire to the escrow agent, Folio Title, who is ever doing the escrow for this project, and basically are a homeowner. That if that collateral, that $1 million of collateral drops, it's typically 50% that platform is going to call you and say, hey, I don't know your name, Mr. XYZ. Bitcoin dropped 50% overnight. You got to give us some more Bitcoin, or we're going to start to sell your Bitcoin down to make the loan to value 50%. If Bitcoin drops 30 or 40% overnight, which historically, previously it has, I don't see that happening anymore, but they will sell all of your crypto because go figure, the lender doesn't want to lose money because the crypto lending platforms do not. Milo is the only one. The other crypto, they're a 30-year mortgage. They take a lien on your property. Crypto lending platforms, when they give you a loan against your crypto, they don't care if you buy bananas, if you buy Miami's white powder. They don't care what you do. I mean, kind of maybe they should care, but they don't really care what you do with the loan because they have no lien against that property. So the only thing that they have, the only recourse they have of that loan defaulting is that collateral, is that federal. I hope that answered your question.
Wallet to wallet, do not trigger tax event?
Great question. The lending platform is saying no. Now you're borrowing against it. Yes, it's a very good question. You're stubborn there.
There's no taxes on that, though.
What's that?
There's no tax on that.
Right, but the mechanism is just push.
Yeah, but he's right because what he's saying is that it's leaving your custody, your wallet, going to someone else's custody wallet. But you could show that there was a loan given on that on that loan, and that it actually technically never leave your possession. But I'll leave it up to the expert here.
Thank you very much. What is the typical loan structure and LTV for Bitcoin-backed loans, and how do you defend from liquidation to that?
I feel arrogant myself. The crowd just went over that first part of your question, but how do you defend yourself against the liquidation events? And I'll use another example. So let's say Bitcoin is at 110. It's at 110 and you're getting margin called at 90 grand. So you'll set in and you'll enter a contract for a put option. And you could put your contract in at 100 grand with 95 grand. So before getting margin called, we get liquidated, then your put option will give you the right to sell your Bitcoin at a higher price, meaning that those proceeds will go to the entity that has issued the loan for you. So it's kind of considered an insurance towards your loan.
It's like a mitigation type of.
Yeah, it's a risk mitigation, and of course you gotta pay for it, like all insurance contracts. But consider puts to be a risk mitigation strategy against your loan.
I want to point out something. Keep in mind, if you're taking a $500,000 loan out on $1 million of Bitcoin, and you get margin called, and you don't have Bitcoin to top up the loan, and you're like, oh man, I'm screwed, just sell it off. You're not losing your $1 million to Bitcoin. You're losing the $500,000 that they lent you, plus whatever interest they charge you, and you're still getting the difference back at Bitcoin, and you still own your property. So if you're not losing everything in this type of scenario.
Yeah, but with a put option, you'll be able to lose less.
It's a great risk management strategy.
Yes.
Okay. Now, for brokers from the audience, how does this work in practice when your client wants to buy real estate but doesn't want to sell their Bitcoin?
Great. Take a loan out against your Bitcoin. That's what most of my customers do, or I give them a non-QM loan from a bank, depending on the amount of Bitcoin they have, or God willing, they have a job, who knows? There's plenty of solutions that they could do. And like I said, the $20 million, that I've done more than 20, but the $20 million plus of crypto-related transactions have typically been done through P leverage, which I think we've talked about ad nauseam at this point.
So what is your LTV versus your LTV?
So I'm just a schlubby real estate agent and a mortgage loan officer. I don't do crypto-backed loans. I connect my clients with block bills. I connect my clients with the right, based on how much crypto they have, where they're buying, their risk profile is. I will strategy with my customers about what the best financing strategy is for their purchase. But I'm just a real estate agent. I'm also a mortgage loan officer. But my license as the mortgage loan officer doesn't really play into crypto space because again, it's out of the FDIC banking system. Yeah.
Like Eric and I were talking earlier today. Ours is 65, but we
LTV, she asked about interest rate.
oh she asked about interest rate. Sorry, yeah, I'm sorry to that. So interest rate will go from 9 to 13%. Yeah,
And the mortgage that go spoils or crypto fast.
crypto lit.
I will say one of the differentiators between his product and the other companies that I use is that they offer this put and call strategy, this risk management strategy, so that if you're maximizing the leverage that you have $1 million of Bitcoin, you're maximizing it out, you're taking the biggest loan that you can. I don't recommend you do that, but if you did that, they have a strategy to help protect when the market swings up or down to protect your margin and your loan. The other companies don't typically or don't offer that to my knowledge.
As far as the contract goes, when you write the contract, you write us a cash contract, 30-day closing, 50-day closing. How does that work? Do you have responsibility to let the seller know that this contract is subject to a crypto-backed loan or anything like that? Do we have to disclose? What do you have to disclose? What's you with this bill?
It's a fantastic question. This is a stupid shill, and I apologize. I created a masterclass for cryptocurrencyrealtors.com. I go through all of this. It was just approved by Florida for 4 hours of continuing education credit. So if you take the class, you get 4 hours of CE, teaching it for the Miami Realtors, teaching it in Orlando, I'm teaching it in California. But pretty soon, every association in the country is going to do it. And I just published my first book on this on Amazon. I'll give everyone a free code. And I'll give free Bitcoin in a little bit. That was a surprise. I was going to say it before we ate. Let me answer your question. My contracts are written in cash, written in USD. In my course, I teach you if you want to price the contract in Bitcoin, how you can do it. It's more challenging, more complicated. I say avoid it completely. Title has to catch up with industry standards to price the contract in Bitcoin. I don't want to go over the whole strategy here, but like I said, when I close, it's in USD. I don't put anything in my contracts. I'm not a lawyer, so I can't. But I don't put anything in my contracts to say subject to crypto funding or crypto loans. Everyone gets accepted for a crypto loan, unless you're a North Korean terrorist or unfortunately in Venezuela. These platforms that I deal with in America, that if you're on a sanctioned list in America, you're not getting a crypto loan from an American company. Blockfills, based in Chicago, they're not giving you a loan either. If you're in North Korea, Venezuela, any one of 10 to 15 or 20 countries. It's not a way to launder money. Not that that's what you're asking, but these companies won't do that. They do KYC, they do AML, know your customer, anti-money laundering. They're going to want to know who's taking the loan out because they need to be protected. You as a real estate agent, you don't have to tell the seller anything about that your customer. In fact, I recommend you don't, because then your
Transaction very flash. So I was worried about the seller was gonna think, whether or not he was gonna accept the offer because of that. And I was also worried about the title company, because the title company is gonna be like, oh no, we can't close this. When in reality, like you said, you're filtering US dollars, so it's a regular transaction.
I had a customer that make sure the loan is seasoned for at least 30 days. I strongly recommend 60 days. But they're buying, if they're buying a property here for $500,000, they're giving $1 billion of Bitcoin, and they get a $500,000 loan, you could close that property in 48. Like, it's not a long process. You can close the property. You're getting $500,000 in cash. There's no underwriter that's going to look at that and say, well, where this money come from? He's not taking the loan out. Now, if he's taking the loan out for $100,000, he's buying the $500,000 property. Then you come to me for the non-QM loan. Now there's $400,000 loan that you need. The underwriters at the bank say, well, where did that $100,000 came from? And it's been in their account for 60 days. They don't care. They don't ask questions. But it's been in the bank for less than 60 days. I had a client. This is a crazy story. I had a client. Most of my crypto degenerates, they think that Bitcoin's always going to go up. And they wait till the last second to take a loan out or to sell their crypto. And when one of my clients did that, she did it 48 hours before the closing. And then the underwriter for the bank said, where did this $100,000, I don't remember what day now was, where did this $100,000 came from? Oh, she sold Bitcoin. Yeah, Eric? Well, where did it come from? She sold Bitcoin. Well, where did the Bitcoin come from? I had to get, no joke, 25 gift letters because the money is coming from Cash App, and Venmo, and this, and Coinbase, and Kraken, and $20 Bitcoin, and $50 of Bitcoin. That transaction didn't close on time. I promised I had to get an extension of the whole thing. Then I had to tell the seller, hey, sorry, this is what's going on here. Like, they're like, well, you didn't tell. So avoid that. Just season the funds. You won't have any issue.
What would you recommend if it's about Minneapolis, which is a pre-construction project, and we're just holding down payments in escrow? Yeah, and we're closing in a year from now.
Yeah.
Let's say a person gets the loan for the down payment, but he's paying the full property in about a year.
Yeah. So again, you can do two things. You can get a crypto-backed loan for the down payment, and then hopefully you have a job or you have enough crypto to pay to remain, let's say 400 or 450,000 on the property, and then you can get a non-QM loan for the property. Or let's just say you have 700,000 or $1 million of crypto and you want to buy the project here. What's great is that you can dollar cost average. So I don't want to talk too long on this subject, but if you were to say, Eric, if you need to give me $500,000 today to buy the property, well, I'm giving you $500,000 of whatever Bitcoin is today. Let's say it's 110,000. I'm giving you let's say it's 100 grand. I'm giving you 5 Bitcoin today. Well, I don't value my net worth in dollars. I value my net worth in Bitcoin. Every day I wake up, I say, how much is my Bitcoin? How much is my Bitcoin? How much Bitcoin do I have? How can I get more Bitcoin? How can I get rid of dollars? That's me. I'm a lunatic, but I'm a pretty smart guy. All of my clients have that same Bitcoin thinking mentality where they value their net worth in Bitcoin, not in dollars. So if I'm valuing that home as 5 Bitcoin, well, if I think Bitcoin's going to go up in a year, I want to hold that 5 Bitcoin. I don't want you to get 5 Bitcoin, because if I think that Bitcoin's going to double, let's say Bitcoin goes to 150,000, which I think we'll see. And my hypothetical is 100,000. That's $50,000 that's gone up in value for those 5 Bitcoin. I've essentially lost $250,000 in Bitcoin value by giving you $500,000 today. But if I can give you just a piece of Bitcoin today, and hopefully Bitcoin goes up in value over the course of a year, I'm not giving you 5 Bitcoin. I'm giving you maybe 4 Bitcoin or 3 Bitcoin. To me, that's a win as an investor, as a Bitcoin thinker.
Can a seller reject a buyer that wants to buy with Bitcoin?
The answer is no. The seller can say, I don't want this.
I really just told
Well,
us.
no, they can't. The seller could say, so here's a fun question. Who are the realtors in Google? Let's get a show of hands here. Let's have some fun. Okay, this is the thing when I talk all over the country, I ask this question. And I want some feedback.
Yes, and I have one last question.
You can ask another question. You can ask us all the questions. I got plenty of content. I haven't even started drinking yet, just 2 mother. Okay, ask. How involved, not the listings. This is for the real, and this is for anyone. Let's have some fun. If you want 20 free Bitcoin, I'll give it to you if you get it right. Just kidding. All right. How many listings are on the MLS right now, South Florida MLS, where the seller has said that they are willing to accept crypto for the purchase of their property? What's the dollar amount? Or you could guess how many listings or the dollar amount. Let's go. None.
2%.
There's no wrong answers, although he's wrong.
I know at least one, because that's my project.
Just one, okay? So 0 and 1, you're both wrong. Who else?
2 or 3% of the legal, but
2 or 3% of the listings. I don't know how many total listings there are. I don't think that's accurate either, but that's actually not a bad guess.
0.5%.
Okay. Dollar amount. Oh, $10,000 worth of sales, $1 million, 100 billion, 300 million. You guys think?
100 car.
100 million? He said 0. You said 100 million. All right, I'll tell you the answer. $500 million. There's over 400 listings on the South Florida MLS residential, where the seller has said that they'll accept crypto. How many do you think those agents know how to execute those transactions? Clear. Yeah, there's like 5 in the country, and I'm one of them, and there's another one here. So the truth is that all of the real estate agents were saying that their sellers willing to accept crypto. They're putting it there for market, whatever, but they have no idea how to execute. And the truth is unless that seller owns the property outright without a mortgage, the banks are not going to take a crypto, although maybe they will. I actually think they will in the future. But right now they're not, although that law is changing. So the truth is that real estate agents are marketing the property. They don't know how to execute. But it could be done if the seller owned the property outright and was willing to accept. Now, here's the benefit of this project. The developer is willing to accept crypto. How many goods have been developed in this property? 64. You have 64 listings right now that they'll accept crypto for the purchase of the property.
What's the best advice to not be afraid of ask the person that has Bitcoins to invest in us?
Okay, first, if you don't know how to execute transactions, take my class. It's not a stupid shill, but if you want to talk Bitcoin, if you want to get in the communities that I'm in and that Natalia's in and others are in, you have to talk the talk and walk the walk. These people, you're not going to know how much they're worth. In fact, if you look at my clients, you'll be like, this guy's a schlo. No, he's worth $50 million. If you're not in the same rooms that we're in, if you don't talk Bitcoin, it's just like any client relationships. If you want to get the Bitcoin rooms and the Telegram rooms and the WhatsApp rooms that I'm all in, that I can bring all of you into and tell you the conferences and the events to go to, you have to go to where crypto like-minded people think. You don't get crypto client from advertising on Zillow. You don't do that. You'll lose your money. Oh, don't waste your money. But you have to go to where crypto people are. And the first thing that I'm giving answer man 103 here. You don't say, "Hey, I'm a real estate agent." No, you got to talk blockchain, talk crypto, talk anything about other than real estate. Develop a relationship with them. This here, by the way, I'm a real estate agent. If you're looking, if you're looking to buy property, I can help you out. And then as soon as you have a relationship with them, then there's a common bond. Trust is very important in the crypto community. No one in crypto trusts anyone. You believe in it. We're a lot of libertarians, anti-government, or small governments. Who is paying a lot of taxes here? Like nobody. And these are very entrepreneurial, very progressive-minded people. If you go in there as a real estate agent, there's 66,000 real estate agents in Miami. What's going to set you apart? If you know a little bit about how blockchain and cryptocurrency work, you know how to execute transactions, that's your niche. The niches are in the riches. That's what's going to set you apart. This is why I was able to execute over $20 million of transactions by first building trust and then actually executing. And I spent very little money on marketing. It's all relationship driven. Once I serve one customer right, they introduce it to their network. Guess what? If I'm dealing with the customers with 20 million in Bitcoin, do you think he's hanging around with his friends who are schlubs, or his friends who are also probably worth 20 million in Bitcoin? So those are the networks that I'm in.
No, but what's the typical profile for a crypto
Yeah, great.
or giant, and how can good brokers attract these kind of clients?
Great. There's ducks in the back. You know where ducks congregate? By water. You know where crypto people congregate by? Crypto conferences, crypto events. So go to crypto events. That's how you can find clients. That's how I did it.
Well, you want to like their
Their profile. I mentioned I don't want to get political, but the crypto community really started from the libertarian movement, which is this one call end the Fed. They don't trust the federal government. They're very entrepreneurial. They don't like middlemen. They don't typically believe in necessarily paying taxes, or they want to minimize their taxes as much as possible. A lot of them come from technology backgrounds or video game backgrounds. These are very eclectic people. I'm sure you can address the profile of your clients, but regardless of how I feel politically, which aligns, believe it or not, it aligns with a lot of them, but regardless of the politics and stuff, that doesn't matter. You just have to be open-minded, because whatever your political views are, you're in the business of sales and customer relationships. Go to technology events, but more specifically, go to Bitcoin events. I've been going to Bitcoin events in Miami where there were 6 people in the room, and I was one of the 6 people. Now there's hundreds. So the network grows and will only continue to grow.
Thank you very much. Please join me and thank Eric, Vivek, and Giancarlo for this amazing piece.
Sorry, bro. I want to show you how you get $200 of free Bitcoin. Do you guys like free Bitcoin? Okay, here's what you're going to do. You're going to take out your phones. I'm going to give you my cell phone number. Text me your contact information. I'm going to show you guys all. I'm going to text you guys, not now because I don't want you to do it on your phones. I want you to do it on your computer, because who knows if there's any hackers in the room. And I want to show you how you can earn $200 of free Bitcoin tonight. I'm not even kidding. I do this in my class, but I'll do it for free now. Here's my cell phone number. Make sure you text me your name, your brokerage information, or what you do in the space, so I can connect you with the sales team here as well. 732-501-0634. Send me your contact information, and I will show you how you can earn free Bitcoin tonight. I'm not in a cake.
Thank you very much.